Hello, welcome to the channel. So in this video, we are going to have a look on International Accounting Standard number 40. So that is investment property. Before we are discussing the investment property, it's my request to subscribe, like and share my channel if you found this video useful. So let's have a look about the investment property. What is this investment property? So here, according to International Accounting Standard number 40, investment property means the immovable property. The examples are land or buildings. So what is the scope? What it includes and where we can use this accounting standard? So IAS 40 investment property came into existence on January 1st, 2005. The objective was to prescribe the accounting treatment and disclosure for the investment property. So here the objective was bringing this accounting standard into existence to mention the rules and the regulations, to mention the standards regarding how to show the buildings or the lands or any kind of immovable property, which includes in the IAS 40 how to show these immovable properties in the balance sheet or in the financial statements. How to show, how to measure, how to recognize, how to de-recognize the investment property. All these terms, all the process, all these standards or the principles includes in the investment property. So let's have a look what it includes or where we can apply this. For example, I have a building. So here it can be a building, it can be a land or a part of it. Either I can mention a part of my land in the balance sheet or building, a part of a building in the balance sheet, or both. But only having a land, only having a building by a business owner, it is not useful. It should be either that rent, either that land should be on rent or it should be used in the capital appreciation or both. Now, I have a land and I have given that for the rent. So, whatever the income I am earning from that land, by giving it to the rent, so that I can show it as an investment property in my balance sheet. Or same as a building, I have a building and I have let it on rent, so I have whatever the income I am earning from that building, I can show it as an investment property. Next, capital appreciation. So capital appreciation means speculative purpose. For example, I have a building worth rupees 1 lakh. So I am waiting whenever this price increase above 1 lakh, I will sold this building. So here it is capital appreciation, capital increasing. Why? How it is increasing? For example, when the price was increased to 1,75,000, I will sold this building and I will earn 75,000 profit. So that is capital appreciation or speculation, which you have already studied in the stock and the commodity market, and also from the PUCM we are studying this basic concept, that is what is speculation. So whenever the prices are increased, the human nature is that we will sold that property or will sold the things when the prices are increased in order to earn the profit. So either we would have let it on the rent, or we are in the capital appreciation process, or both. These three things you can, if you have, you can mention it as an investment property. Next, what it does not include. So if the investment property is for the production or supply of the goods, so if you are using the land or you have a factory, that is a building, and you are using for the production or the manufacturing, or you have a warehouse, that is supply of the goods or the services, you cannot mention it as an investment property. So this will come in the IAS 16. So IAS 16 has a separate accounting standard for these kinds of properties. Next, administrative purpose. So you have a building that is an office, you are using for your own business, you cannot show it as an investment property. So for that also you have IAS 16, a separate accounting standard. Next, if you have sell in ordinary course of business. So in ordinary course of business you are using that building, that will also not come in the investment property, it will can show as a inventory. So these are the basic concepts relating to the investment property, what it includes and what it does not include. Next, recognition of investment property. So from the beginning we have studied IAS 39, that is all about the financial asset, that is the financial instrument recognition and the measurement. So where we studied the recognition of the financial asset, measurement of the financial asset, derecognition of the financial asset. So here also in IAS 40 investment property we have to study how to recognize the investment property, how we can identify the investment property. So here recognition same is divided into two types. One is initial recognition, when we acquire the property in the first year, how we can recognize the asset. In the second, third and the fourth year and so on till the life of the asset, how we should recognize the value of the investment property. So first, in the first year, in the beginning, when the asset was acquired, when the investment property was acquired, it includes cost of the asset. So in the first year we have to only show the cost of the asset. What was the cost which incurred for purchasing or acquiring the investment property? It does not include any kind of operating cost, it does not include any kind of operating loss in the first year of the acquisition. Only you have to show the cost of the investment property in the balance sheet. You cannot show the operating cost and you cannot show the operating loss in the pre-stage or pre-acquisition stage of the investment property. This is the initial recognition in the first year. Next, in the subsequent recognition, that is in the second, third and the fourth and so on till the life of the asset, that is the investment property, only the fair value of the asset. What will be the fair value of the asset? That you have to shown in the balance sheet. Next, how to derecognize the asset? So here derecognition of the investment property is divided into two. One is on disposable and when permanently discharged or withdrawn from use. So here on disposal means when you are aiming to sell it for the financial benefit. When you are aiming to sell that investment property, either it is for the you are completely selling that property, you are transferring the property to some other person. So that is the sale of the asset, that is on disposal. Next, when you are permanently withdrawing that investment property from use. So here it means you are not getting the financial benefits, you are not getting any financial benefits in the current year or in the future, so you are completely withdrawing that asset from that investment property from the use. So from both these it can be a gain or a loss. So you have to show it in a profit and loss account. If you sell the asset, either you can gain a loss or you can gain or you can face a loss. If you are permanently withdrawing that asset, then also you can get a gain or you have to face a loss. Both you have to show in the profit and loss account. How you have to show this? You have to show the net disposable proceeds minus carrying amount. So whatever the amount you will get after selling the asset minus the carrying amount. Next, transfer of investment property. So here, if you want to transfer the investment property to some another asset, some another kind of asset, how you can do it? So there is one condition: only if the investment property was used in some another nature of the business, then only you can transfer the investment property to some another kind of asset. How? For example, I have a building. That building I was using before, I was using for the office. This building, I have a building. So this building before renting, for example, now I have let it on rent. Before renting this building, I was using this for my office. So this is the situation. So transfer occurs when there is a change in use. So before I was using this for my office, now I have let it on rent. So this is the change in the use. So office in the ನಾನು ಏನು ಮಾಡ್ತಾ ಇದ್ದೀನಿ, I am giving it for the rent. So this is the scenario where we can transfer our property, transfer the investment. So here investment can be transferred to property, plant and equipment or inventory. So here property, plant and equipment means we can use it in the manufacturing process. So this land I can convert it into the factory, or I can convert it into the warehouse, that is the inventory, for storing the inventory. Or I can transfer the investment from property, plant and equipment to the investment. So how? If for example I have a building, so this is a factory. So I want to convert this factory into the investment property. So investment property means either I will let it on rent or I will wait for the for selling it in expectation of higher price. So this factory I will, for example, this factory is worth of 1 crore. So when the prices are high, it will become 1 crore. For example, it will become 2 crores. So when this factory that is worth of 1 crore, when the prices hikes after 15 to 10-20 years, if the prices are high from 15 to 20 years, I am using this building as a factory. After 15 to 20 years, the worth of the value of the factory has doubled, so 2 crores. So this is capital appreciation. So I can change from property, plant and equipment to the investment. Next, from property, plant and equipment I can use it for the inventory. But here the factory can be converted into the inventory. I can use it for the inventory purpose also. These are the cases for transfer of the investment. I can transfer the investment to property, plant and equipment or inventory. From property, plant and equipment I can transfer into the investment. From property, plant and equipment I can transfer it to the inventory. So these are the concepts relating to the IAS 40, investment property. If you have any doubts, you can ask me in the comments below or in your WhatsApp group. Thank you.